Good morning. And again, we are going to sort of continue the kind of the tone that we had set in the morning, which has to do with technology and innovation. And we heard from Mr. Vaidyanathan some of the measures that Indian banks have been taking. We know that there are certain rough ends that need to be taken care of, but nevertheless, we are on a journey, and we have two eminent speakers with us. We have Mr. Rajiv Anand, who is the Deputy MD of Axis Bank, who has put in a very long stint with Axis Bank, and I think he's best poised to let us know about some of the measures that large banks such as his has been taking on this front. And we have Ms. Manisha Girotra, who is a very well-known name in the investment banking circles, and I have known her for a long time. I mean, although I haven't interacted much with her, but as a financial journalist, we keep to get her name when it comes to some of the big deals that happen in the space. So I'd like to start off with Mr. Rajiv Anand, maybe just to step back a bit and look at the broad story of growth as far as the country is concerned, which is helping probably the financial services space. I would like to know, what is your level of optimism when it comes to the financial sector, and banks such as yours, how it is looking at the way the economy is shaping up. What are the opportunities and what are the challenges? Maybe that could be a good opener to have. Then we can come to some of the specifics.
Firstly, thank you for having me. I'm absolutely delighted to be here. I think there is all-round optimism about the economy. I think when you look at it from a global perspective, as I talk to investors, when I talk to local investors, when I talk to my clients, whether on the SME side or on the corporate side, there is all-round optimism because of the fact that inflation is in reasonable control, unlike in the Western world. There is strong growth. I mean, we can argue on whether we will grow at 6 to 7 or 7 to 8, but those are kind of numbers that the Western world is clearly not seeing. And I think most important, there is political stability, or we certainly hope that is what we will get delivered on 4th or 5th of June. I think if you put all this together and add to that the tailwinds that have gotten added because of the fact that there's been so much of hard work that's happened over the last 10 to 15 years in terms of the amount of infrastructure that's got constructed. Roads have got better, ports have got better, airports have got better. As also the topic for today really is the digital infrastructure that has gotten built. I think will certainly hold us in good stead as we go forward. I think what is also appreciated is the fact that the way that the government and RBI managed COVID and its implications on the financial sector has ensured that we've come out of COVID in a much stronger position. SMEs are in much better situation thanks to the ECLGS scheme. The fiscus is in much better control, unlike in the Western world where, for example, in the US, fiscal deficits are currently running at 8%. And we've got an environment where revenues are growing, fiscal deficits are actually in pretty good shape, and we have money to invest as well. So I think corporate, SME, retail, which are the three segments that we have, I think in each of these segments, there's all-round optimism. And ultimately, I think banking is a microcosm of what is happening in the underlying economy. Growth is good, margins are good, the credit environment is benign, and I think, therefore, it's a great time to be a banker, really.
Great. Ms. Manisha Girotra, you are a person who keeps looking at opportunities both in India and elsewhere, and you are in touch with so many investors. So I would like to get a sense from you as to what is the kind of, how upbeat are investors when it comes to, investing in India? Also, what are probably some of their concerns in this country?
Thank you, Arun, and thank you for your kind words. I think, I'm in this unique stage. I've worked in India investment banking for 32 years, and I'm in this unique stage where, for the first time in my career, global investors are more positive on India than we are. We tend to look at it as a glass half full and say, oh, these things could be better, those things could be better. Our growth needs to be 9%, not 6.8%, etc., etc. Currency needs to be stronger. But they look at us and say, look, what you have, none of us have. Most global economies today are growing at sub 2%. Some are degrowing. There's just no capital coming into these countries. People aren't willing to work. The population is aging. So for all of those reasons, we are seen as a very attractive destination. Young population, skilled workforce. I think where we have really differentiated ourselves from even China is that while China became the factory of the world and we as China plus one are trying to compete on that, what we are also offering in addition to a low-cost destination is really skilled, upskilled and reskilled workers, right? So we have the potential to become the R&D hub, to move up the value chain, to, have AI-enabled platforms. Our startup ecosystem, of course, nobody needs to reiterate what a great job they've done. So people are really optimistic on India, want to put capital into India. Today, our FDI is about $650 billion. And again, another thing that's very positive that's happened from a foreign investor point of view is that earlier in the first 15 years of my career, you would only see FII inflows, foreign institutional investors coming into the stock market. While that's great, that's money which can fly away, the minute the currency drops, the minute there's a bad outcome in elections, etc. What's changed now is that we are getting strategic capital. We are getting foreign strategic companies, private equity, which has much longer gestation, sovereign wealth funds, which look at, an investor like Temasek has gone and bought a controlling stake in Manipal Hospital. Sovereign wealth funds don't do that. They buy minority investments. CPPIB has gone and bought Renew Power, a controlling stake. It's unique to sovereign wealth funds, but that's the kind of comfort they have and that's the kind of way they want to play into our country. And that's why we are seeing more and more strategic capital coming in. So I remember, I joke with my boss and founder, Ken Moelis, and when we started Moelis, India used to be the appendix on page 431 if I went to Norway for a presentation, and I was lucky if I got 4 seconds, right? It's like, literally I pointed to the map and everyone said not interested. And today I'm front and center, global CEOs globally want to have calls with me just to understand, who are clients who want to understand India. So, it's really a great time, as Rajiv said, to be, showcasing your country to global investors, just because of the kind of optimism. Concerns, I think the concerns, of course, are the usual. Geopolitics is a big concern. We are now a very open economy. So people are worried that, if there's something goes wrong in geopolitics, commodity prices go up, oil prices go up. Those are always the concerns. Election outcome, I think while we are all factoring in a very positive outcome, people do want to see that happen. I think one of the most important things that people see for us in a world time like this is that we offer a stable political framework, which very few other countries offer today. We offer a strong political leader. We offer, in addition to all that Rajiv said, we offer a very strong and robust policy framework. Our regulators, RBI, SEBI are really on the ball. Innovation is right up there when it comes to these regulators. So I think all of that is a positive, and investors want to keep seeing more of that. Because if you remember, Arun, when you and I started, that wasn't the case, right? I mean, policy changes were like, let's increase FDI in telecom from 26 to 49%. That's all it was. Now we made systemic changes through GST, DMON, RERA, etc. So strong changes have been made, and investors want to continue to see that. And for that, they want to see continuity of government.
That's excellent. In fact, we would like to see, how this is transformed the banking sector itself. Because, when we talk about the banking sector today, it is no longer the fragile, ecosystem in banking that we talked, say, a few years ago, where, we had huge NPAs and there was so much of uncertainty around, and, banks collapsing one after the other. I mean, it's still a cautionary stage. I wouldn't say everything everything is beyond us, but at least we are in a better place for now. I would like to know from Mr. Rajiv Anand as to in this particular ecosystem where things are looking better and finer. How do you address the needs of the financial needs of the rising financial needs of the modern consumer? How do banks like you, yourself, shape up to tackle those, and especially on the personal finance side, which is a big area of interest, and precisely the reason why we hold such events. maybe that would be a good way to look at it.
So let me take the first part of your question. Actually, I think that's an important one that you raised. Just 7-8 years ago, in India, we had a twin balance sheet problem, which means that corporates were over leveraged, and as soon as you saw a slowdown, you saw companies begin to default. And similarly, on the bank side, banks were undercapitalized, dealing with a huge amount of first recognition of NPAs, and then so the whole resolution process as well. We've actually come through that very, very successfully. So you're in a situation where corporate balance sheets are in probably the best shape that we've seen in a decade. Leverage is low, and therefore and cash generation is very high, and therefore you're seeing profitability show up. And I think the newspapers keep talking about the fact that we are hitting 70,000 and 75,000 on the index, etc. But I think to some degree it is also a fact that corporate profitability continues to be fairly strong at this point in time, and therefore at the end of the day, yes, there will be pockets of exuberance, but by and large the market is a reflection of what's happening in the underlying economy. Similarly, today banks are, and when I say banks in the wider sense of the term, both public and private sector banks are very well capitalized. The NPA problems are sort of behind us. And the credit environment, like I mentioned earlier, is quite benign. And so therefore, as we think about 7, 8, 9% growth, the ability of the corporate sector to create new capacities exists because their balance sheets are clean. The bank's balance sheets are clean, and therefore they have the ability to lend as well. And I think we are really in that virtuous circle at this point in time to be able to power growth as we go forward. And I think all of us have learned our lessons from the previous cycle. It is not as if underwriting standards are going to change just because the world is looking much better. I think banks have become a lot more conservative in terms of the way that they're writing risk, the way they're pricing risk, and the way that they are documenting risk as well. So I'm quite optimistic about the fact that the banking industry will continue to do well as we go forward. Coming to the retail side, I think retail side has been a paradigm shift over the last 10 years. It's all digital. 70-80% of transactions now go through digitally, either on internet banking or on the mobile app. I think in the previous session, people spoke about the fact that maybe we've not moved far enough, but I think it's a function of customer expectations changing. We've come from a world where people used to take one-day leave to do bank work, as it was called, to update your passbook, withdraw 5,000 rupees, get a new checkbook and such like. And today you're in an environment where you can make payments on a Sunday evening to whoever you want, whether locally or globally. You can update your address on the mobile app. You can buy a new credit card or a loan or whatever it is on the mobile app on a Sunday evening. And I think fundamentally we've moved a huge way in terms of being able to serve the customer digitally. And I think if we didn't do this, we are in an environment where customers are buying dosas on Zomato and getting a cab on Uber. And if those are the customer expectations, and we think that we still want customers to generate paper and come to the branches, we would have died. And so therefore, I think it is fair to say that that banks in India have certainly kept up with changing technology and changing customer expectations. And I think ultimately this is a journey, and we are well and truly down this journey as we go forward.
Wonderful. I mean, that is so true, because I think it's the need from the customer that is driving a whole lot of businesses centered around it, and the customers no longer have the patience to to take a day off to go to the bank. I mean, that's absolutely true. In fact, there have been so many people who have been apprehensive about digital banking, and I think that still exists. And in the previous session also, we addressed some of those areas where, the cybercrime and cyber frauds. I think that's one part which needs a lot of, attention, etc. So maybe we'll come to that. But I would like to take Ms. Girotra, bring into the picture, the way the personal banking space has enormously changed. I know you look at the merchant banking part of things, but as a person who has been in the banking, in the financial segment for so long, would you help us capture some of the big changes that are going on behind the scenes when it comes to dealing with the customer?
Sure. I think, just to step back, when Rajiv was talking about the changes, my dad used to work in a state-owned bank and, he was posted in Himachal in Simla. And he was very passionate about taking me and my brother to just see all the branches. Those 10 branches used to be open to basically get, in remote areas to get bank deposits, etc. So we used to go with him to the remotest areas and in Himachal in a rickety jeep. And one of the times we went, he had gone to meet the villagers that he had given financing to for their cows and buffaloes. And when we went there, the villagers said, we cannot repay your loan because all the cows and buffaloes have died. So my father and the team were shocked and said, how did they die? I mean, nothing's happened. There's been no famine, etc. And they said, you can come and see. We have new cows and buffaloes which we've taking loans. And what they'd done is that basically the bank had actually stamped the horns of the cows and the buffaloes and they cut off those horns. So basically there was no way the bank could recover the money. So from there to, I heard earlier that we were complaining about the fact that, there's too much KYC, it's too cumbersome. I think for banks, life has come a long way. And why has it come a long way? And what is it, Arun, to the point that you were asking me earlier, that what people really admire is the digital public infrastructure that we've created, right? The government to person direct transfers that we're doing now. We've done about $360 billion of subsidy transfers, saving about $35 billion for the government, which is literally like about 1.4% of the GDP. So I think that strong, robust ecosystem that we've created at such a low cost, effective way is what the world admires. They haven't been able to do it, and we've done it. We've actually fast-tracked it, right? The World Bank says we've basically, brought financial inclusion up from 25% to 80%, and we fast-tracked it by about 47 years. So that's the kind of fast-tracking we've done, thanks to just it's thanks to what the government has done in terms of creating the infrastructure. The jam trinity, we all know that, right? What has happened? The 50 crore Jan Dhan accounts, which basically have brought so many more people into the ecosystem. Aadhaar, each one of us has an Aadhaar card. We don't even think about it. We just use that for every sort of identification. I can now travel from Bombay to Delhi just with my phone. I can pay everything on my mobile phone. If I forget my wallet because I'm taking an early morning flight in a hurry, I'm not in a panic because I know I have my ticket on my phone, I have my identification on my phone, and I have money on my phone. All of this has happened in the last 7 to 8 years, right? I mean, till 10 years ago, we lived in a very, very different world. So I think that's what the world admires about us, the way that we have been able to bring the bank to the individual, right? Whether it's personal finance, retail finance. I think the CEO of Uber said, right, recently that we are the most difficult customer in the world because we want everything and we want it free. Right? And that's what these banks are delivering. So you have to respect them for that because they're delivering the best-in-class service in a challenging environment where the country is so widespread and diverse, where people have such different requirements, but they also they want to pay in the most competitive way. So I think every global client I talk to, for example, I advised Vodafone on the acquisition of Hutch in India, and they had this huge thing about teach Hutch India. It was called Hutch India, and so bring the best global practices of Vodafone into India to teach us Indians how to run a business. Today, all my clients have the reverse program, which is that learn in India, learn from your businesses in India, and take those practices to the world because it's amazing what we're able to do. Competitive, low cost. We're all very highly demanding. I know this now, one of the customers said, when am I going to stop this eKYC? Because we're done, right? We don't want anything. So we've leapfrogged. We've taken what we've got and we're like, we want more, which is right. We're a young, hungry population. We want more. And all credit to the likes of Rajiv, etc., that I can sit on Sunday evening, do what I like, because I know he's working on Sunday evening to give me that innovation, right?
Well, I mean, banks have changed so much. I mean, when you walk into any kind of branches today, I remember, 15 years ago when you walk into a bank branch, it would be to withdraw money or deposit money and you'll have to wait and you'll identify the thing and then you write your stuff. You borrow a pen from somebody which you sometimes never give back. But all this happens in a bank branch, but today you have those kind of things are there, those counters are there, but I think the majority of the staff is there to help you look at services. So when somebody approaches you, do you have a demat account? What do you do to open a demat account? This is the kind of things. Do you need a personal loan? And so it's so much of service oriented. And I would like to come to that, with Mr. Rajiv Anand as to some of the specifics that, for instance, an Axis Bank is doing on this front. So suppose I'm a customer of Axis Bank and, with an income of so and so. It may not be too much, but what is the kind of push from the bank that identifies the customer, tries to look around his needs and approach him like Mr. Vaidyanathan was trying to say? Has that already been happening? And what are some of the interesting products, for instance, that you would be having?
So banks have a lot of data. We know a lot about you. I mean, as soon as you start to fill the form, we know what your name is, your demographics, where you stay, your income levels, etc., etc. We then know a lot about you looking at your transactions through the bank account. We know a lot about you based on how you use your credit card. And there we can see patterns that you go to a Chinese restaurant every month. And therefore, what banks are banks who are increasingly getting focused on using this data to be able to serve you in a much more intuitive manner. And therefore, what is called hyper-personalization. And so therefore, the mobile screen that you're using, I am using, will be very different from the mobile screen that you're using. The kind of offers that I'm making are based on your data patterns that I am seeing, as opposed to offers that are being made to me, which is based on the data patterns that I have. There is no point, giving you golf lessons when you have no interest. But maybe I play golf, so therefore making offers on 3 golf lessons or whatever it is becomes much more important to the customer, and the customer begins to realize that maybe the bank is working for me, and that is as you hear customers, they don't want to be a number. They want the bank to treat them as a single individual and serve me accordingly. And that is really what we are working towards. And if you look at, like I said, if you look at the mobile app, I may not necessarily get a offer for a personal loan, but you may get an offer for a personal loan because of the patterns that we are seeing. We will nudge you, and we are using a lot of behavioral finance as well to be able to nudge you in one way or the other. We will make you, if you look at the mobile app, it will tell you that people like you, I mean, what you see on Amazon, for example, banks are able to do now thanks to data. And so therefore, this whole process of hyper-personalization, I think, consumer companies have gotten this much better. Starbucks and, such like have got this much better than banks, but I think banks are leapfrogging down this road as well.
Okay, wonderful. I think we will have time for maybe one question or something from the audience, because we have a very interactive audience out here. I hope it's not just complaints, but it's also some. So there is no question now, is it?
Sure. Having a banker in the room and not getting complaints is a contradiction in terms.
I wanted to ask about Access credit card, but you said no complaints.
That is too specific, I suppose. I mean, we can always. I think the other gentleman here. Can we have a mic?
This question to Mr. Rajiv. Now at time, there are all the banks use the same type of technology, and using the same type of technology, they use the same type of services also, personalized or otherwise. So how one will choose one bank over the another? Or why for the Axis and not for the IDFC first? That is the first question. And the general question is this, that yes, I agree that economy is doing very well, and GDP is touching 7, 8 and 9, may go to 9. But GDP per capita throws a poor figure. And that shows that the economy is growing in the K-shape. So some sections doing very well, some sections do not that good. So what is the solution for the economy grow not to the K-shape but the U-shape?
So I think the first one is a great question. I think every bank has a digital strategy, because I think it's a question of survival. If you don't have a digital strategy, you might as well not come to office, because you lose customers on a daily basis. But I think customers that are able to better understand the customer will win in the long run. customers who are able to convert data into intuition will win in the long term. Banks were not very focused on what is now called UI UX. I mean, the way that you interact with the mobile app, there's a lot of science involved in that. And we want to make it as simple as possible for you to be able to transact on the mobile app. And you will find that, I mean, very often you hear conversations ki, this bank's mobile app I find is very simple and easy to use versus, some other bank. There is a lot of science and effort and, work and innovation that goes into being able to make that as simple for you as possible, such that interaction between man and machine becomes, second nature for you. And banks that are able to do that will win in the long term. And I also do believe that people will choose banks because of the mobile experience or the digital experience that a particular bank is able to create. And we are already seeing that. Yes, particularly on the liabilities side, ultimately we're in the business of trust, which means that you will put your life savings with a particular bank because you trust that bank and because it has the distribution capability that, Manisha spoke about branches in deep Himachal or a branch next to your office or the train station or next to your house or whatever it is, gives you comfort or trust in that particular entity. So hitherto it was about brand distribution and trust. I now add digital and digital capabilities to be able to attract new customers. Why attract new customers? To sustain your existing book as well.
I think the other part of the question...
Yeah, I'll quickly answer. I know time's up. So I think, look, the K-shaped question you asked is very relevant in somewhat more developed economies. What do we need as a country today to do exactly what you said, which is increase and improve the GDP per capita, which is low? There's no question about it. Is that we need to create more employment. We need more industry. We need more de-risking from China, more global manufacturing coming, more supply chain shifting here. So I don't think we should worry so much about the fact that there is a concentration of wealth at the top, because don't forget, along with the concentration of wealth, we have created a fabulous 400 million urban middle class, which is actually getting wealthy, which is actually spending. You're seeing the kind of experiences they want, the travel they want, the kind of weddings they're having. So incomes, and that's leading to a lot of wealth redistribution. So I think our priority, and why is the government spending on infrastructure the way they are? Because they're trying to create jobs at the lower end in construction, etc. So our priority through the digital public infrastructure, where we're effecting a redistribution through the kind of employment that we are creating through public capex and private capex, is to create more employment and lift the lower end. In a country of our size, we're not going to become rich at a GDP per capita level by doing a trickle down. We have to lift the bottom up, and I think that's what we are doing effectively. So we shouldn't worry too much about this K-shape, which I know the Western economists love. I think we have a different model, and that model is let's lift as we climb.
Thank you so much. I think time is up. Unfortunately, we don't have time for more questions. We can always try to get the speakers backstage if possible, if they have time.